Hey there, welcome to Optimal Wealth, where we're all about helping you build a successful and prosperous life. Today we're diving into the exciting world of real estate investing. Now, I know what you're thinking. Real estate can be a bit intimidating, right? Well, fear not. We're here to break it down and make it super easy for you to understand. In this video, we'll cover all the basics you need to know about real estate investing. From a big picture overview of why it's such a popular strategy for building wealth to the nitty-gritty things you'll come across in the real estate world. Don't worry, we've got you covered. Moreover, we've also got some fantastic tips to help you get started on the right foot. So buckle up, grab a pen and paper, and let's dive into the world of real estate investing. Why real estate investing? Well, real estate refers to land and any structures that are built on it. Basically, it's all about the property you can see and touch. When we talk about real estate, we're talking about things like houses, apartments, offices, stores, warehouses, and even open land. Think of it this way. Real estate is like a big puzzle piece that makes up our physical world. It's like the places we live in, the places we work, and the places we go to shop or hang out. Now, why is real estate so important? Well, besides being the spaces we occupy, real estate also has a lot of value. It can be bought, sold, and rented out to other people. And guess what? That's where real estate investing comes in. Real estate investing is a popular way to build wealth, and it's easy to see why. Here are some key reasons why people love it. First, real estate has a great track record for making money. Property values tend to go up over time, so your investment can grow steadily. Another awesome thing about real estate is the potential for passive income. When you own a property, you can rent it out and collect regular rental payments. That's money coming in without you having to work for it. Last but not least, real estate investing lets you diversify your investments. You can own different properties in different areas, so even if one property doesn't do well, others can help balance it out. So with all of those advantages, it's no wonder why real estate investing is one of the popular go-to strategies for building wealth. Key terms in real estate investing. Before you enter the real estate world, there are certain key terms that you need to understand. Here we give you some of the most important ones. Mortgage. A mortgage is a loan that you obtain to finance the purchase of a property. It's a legal agreement between you and the lender, typically a bank. The mortgage allows you to borrow a significant portion of the property's value up front and pay it back over time, usually with interest. Equity. Equity refers to the portion of a property's value that you actually own. It's the difference between the property's market value and the amount you owe on any outstanding mortgages or loans. As you pay down your mortgage or the property's value increases, your equity in the property grows. Leverage. Leverage is a powerful concept in real estate investing. It involves using borrowed money, such as a mortgage, to control a more substantial asset. By leveraging your investments, you can potentially amplify your returns. For example, if you put down a 20% down payment on a property and take out an 80% mortgage, you effectively control the entire property's value with just a fraction of your own money. Cash flow. Cash flow is the net income generated from a rental property after deducting all expenses. It's the money that remains in your pocket after paying for mortgage payments, property taxes, insurance, maintenance costs, and other expenses. Positive cash flow means you're making a profit, while negative cash flow means you're spending more on the property than you're receiving in rental income. Appreciation. Appreciation refers to the increase in the value of the property over time. Real estate values can rise due to various factors, such as market demand, improvements in the neighborhood, or inflation. When a property appreciates, its market value increases, allowing you to potentially sell it for a higher price than what you initially paid. While there are numerous terms in the world of real estate investing, let's take it one step at a time. Types of real estate investments. There are also various types of real estate investments to consider. Residential properties. These are homes, apartments, or condos for people to live in. Commercial properties. These include office buildings, retail stores, and hotels used for business purposes. Industrial properties. These are large-scale properties for manufacturing, distributing, or storage. Think factories, warehouses, distribution centers, and industrial parks. There are also real estate investment trusts, or REITs, which are investment vehicles that allow you to invest in real estate without owning it directly. There are companies that own, operate, or finance income-generating properties. By pooling funds from multiple investors, they can offer diversification across different property types. REITs also pay regular dividends to investors based on the rental income they generate. The process of real estate investing. Now that you've got a good grasp on the basic terms and types of real estate investing, let's move on to the next step: understanding the process. Here are the key steps involved in real estate investing. 1. Researching and identifying potential properties. Start by doing your homework. Research the real estate market and look for properties that match your investment goals. Consider things like location, property value trends, rental demand, and potential for future growth. Aim for properties that have the potential to give you good returns on your investment. 2. Financing and purchasing the property. Once you've found a property you're interested in, it's time to secure the financing. Unless you're buying it with your own money, you'll need to work with a lender to get a mortgage loan. Shop around for the best interest rates and loan terms. Once you have your financing in place, you can make an offer and negotiate with the seller. If everything goes well, you'll sign a purchase agreement and move forward with the closing process. 3. Property management and maintenance. If you're planning to rent out the property, effective property management is crucial. This involves finding tenants, collecting rent, taking care of maintenance issues, and ensuring you comply with local regulations. You can choose to manage the property yourself or hire a professional property management company to handle these tasks for you. 4. Potential selling or rental strategies. Depending on your investment goals, you have different options for generating returns from the property. One option is to rent it out and earn rental income over the long term. This can provide a steady cash flow and the potential for property value appreciation. Another strategy is to renovate or improve the property and then sell it for a profit, known as fix and flip. You can also combine rental income and selling properties at the right time when the market conditions are favorable. Tips for beginners. Before you're too eager to start, let me give you some tips. First and foremost, take the time to educate yourself about the real estate market, investment strategies, and local regulations that may impact your investments. Attend workshops, read books, listen to podcasts, and follow trusted real estate experts. The more knowledge you gain, the better equipped you'll be to make informed decisions. It's also wise to begin with small and manageable investments. This allows you to gain valuable experience without taking on excessive risk. Consider starting with a single-family home or a small residential property that fits your budget. As you grow in confidence and experience, you can gradually expand your portfolio. And remember, real estate markets are dynamic and ever-changing. Stay updated with market conditions, shifts in demand, and emerging investment opportunities. Be flexible and open to adjusting your strategies based on market changes. This adaptability will help you maximize your returns and stay ahead of the game. Now we want to hear from you. Did you already have experience in real estate investing? Just drop it in the comments. And if you have any questions, don't be shy, just ask. If you want to learn more about how to build wealth, make sure to subscribe to our channel for all things related to the journey of wealth. Thank you so much for watching, and we'll catch you in the next video.